Yeah, I take one day off and rates plummet. So, my name is Dan Free. I do the rate update every day to inform you guys everything real estate, especially with our focus in on the financing piece of the puzzle. So, if you're here, you're probably a realtor or maybe a mortgage advisor, or you're out there looking to maybe buy your first house or first investment property. Thanks and welcome for joining us. So, what we try to dissect on this channel is what's going on with mortgage rates and thus what's going on with housing. So today's focus is going to be on the two big pieces of the economic calendar that we're going to go through, and I'll show you that right here. That is the GDP and the initial jobless claims. Those are the two events out today. Why do we care about GDP? Well, that's going to reflect if we're kind of in how the definition of a recession used to be. So we're going to validate that. And then I'm going to go through some job numbers. That is the sweet spot or the silver lining in all this right now from the Federal Reserve. That's the Federal Reserve's target now. They've already doubled mortgage rates. Now they're on their way to crushing the employment market. So let's get over to this detail so I can show you how and when. So you can see here, the jobless claims came in, they hit the 5-month low despite the efforts of the Fed to slow down the labor market. That's the headlines, but that's really not what the Fed said. Let's drive down into the data that we have here. Initial filings for unemployment claims fell last week to their lowest level, I'm thinking in like years. No, in just a couple months. So, you know, the labor market is kind of up and down. I'm going to show you some really dramatic information here in a second on how many job openings there are. But the drop to 193 was below the estimate of 215,000. So when you're thinking of the whole country, you know, a miss of a couple thousand or so isn't that big a deal, especially when you see how many job openings there are. We're going to go over that in a second. A separate report shows inflation running hotter than previously reported in the second quarter. Well, the second quarter is already over. So can we give that a break? Because here's my analogy on kind of this stuff. The Federal Reserve wants to really drive down inflation. And they keep making moves and moves and moves every month, but they're not giving anything time to settle. It's like, let's say you gained a bunch of weight over COVID and now you want to lose, your goal is to lose 20 pounds. So you starve yourself for 2 days and then go back and weigh yourself and say, it isn't working. So I'm not going to eat for another 2 days. And then you go back and it isn't working. Then you starve yourself another 2 days and then you finally end up dying. Okay, that's an extreme point, but you get my point. You got to give it time to work. You got to put in a routine. You got to exercise. You got to do a bunch of other things. You can't do one piece of the puzzle and watch things come down. So the point there is, Fed, give it time to work. How many adjustments have there been? The Federal Reserve raised rates 5 times so far this year, 5 times, and raised it 3%. Okay, I don't know of any other time in history that that's been done. If you know that, put it down below, please. But when you're dissecting this article is basically fantastic. Here's what you see on here. You see right through here, headline numbers. Initial filings for unemployment claims fell last week to their lowest level in 5 months. A sign the Labor Department is strengthening, even though the Federal Reserve is really trying to slow down everything, especially housing and the jobs market. But when you dissect those numbers, you go down through here and you see this. Central officials specifically have pointed out to the tight labor market and its upward pressure on salaries as the target of their policy tightening. So now their eye is not specifically on housing, but also the job market. And then we have some inflation numbers. The PCE number is going to be out tomorrow. That's the number one guide or gauge the Federal Reserve monitors. I'm going to give you that report in the morning. Let's not focus in on the rear view mirror. Let's go forward. So here's some job numbers that you might think, wow, that's really surprising. So there's a JOLT index that I follow. The reason why I follow it is it shows us how many job openings there are. So if you see the labor market getting good or bad or whatever, it's like it's a proponent of how many openings there are. Well, there is 11.2 million job openings right now. I apologize. I'll rephrase that. That's where we were. Now there's only 11 million job openings, and that's on this report right here. So there's 11 million job openings. So if you're in fear of losing your job, there's 2 job openings for every person out there looking. So there's ample jobs. So I don't know how in the world the Federal Reserve is going to drive up the unemployment rate with so many jobs open. But the next piece of this puzzle is the economic calendar. What all events are taking place today and tomorrow that should play maybe some havoc on the markets? So we see the GDP. As I said, the GDP came in on its 3rd revision, 3rd time. They reviewed this 3 times, and it came in every time at -0.6. So now maybe somebody will say, okay, we're in a recession because of this. but I think they changed. If you go to Google it, they probably changed the definition in there already. So what it is now, I don't know. But now we see the initial jobless claims getting a little bit better. Again, it's the silver lining behind everything. Last month's last reading was 209,000 people filed their initial jobless claims. So that's a first time file. They thought there was going to be 215,000. It only came in at 195,000. Again, guys, give it another week or 2 or 3 to see how all this settles in. Federal Reserve, please stop until you analyze a bunch of this data. Tomorrow, we're going to see the core PCE. That is the biggest number that the Federal Reserve monitors. They put the most weight in on that. I'll be coming out tomorrow morning with that to show you how that is, basically came in, what effects that having on the market. But based on just the headlines we have today, why are you here? Well, you're here to figure out what mortgage rates are doing. Okay, so next let's go over to the MBS market. This is the bond that trades on Wall Street that is giving me kind of an insight on where mortgage rates are going today and throughout the day. So you're seeing on the board right here, the mortgage-backed security bond is down 42 ticks. What does that mean? For those newbies, real quick, this is a bond that trades on Wall Street. Its yield is the biggest portion of your mortgage rate. So the yield on this thing moves over to your mortgage rate, and then the lenders, whoever posts the mortgage sheet at that time, or the rate sheets at that time, add in loan level price adjustments, their profit margins, and everything else. And that's what comes out with their mortgage rate. So this is the biggest piece of the puzzle when it comes to your mortgage rate. So what you're seeing on the board right now is the price of that bond that's trading on Wall Street. As the price goes down, that you're seeing here and you're seeing throughout this whole chart for the last year, rates go up. That's how it works. So we love when this number goes up, but we haven't seen that in quite a bit. Well, we saw it yesterday, but it's all basically giving itself back today. So this is where mortgage rates are going. So this should equate out to at least an eighth of an increase in rates today. Here's where rates were or closed last night. So we're going to teeter back on the 6.75 at least. We should be there by midday today. We haven't really on their sheets. We haven't really hit the 7% mark, but trust me, we were there and we're still there. So that is my report for today. I hope you enjoy my videos. If you do, please check me out on podcasts. So whoever you listen to podcasts on, just search in there. Search for Dan Frio or The Mortgage Update with Dan Frio. If you'd like to find out more about me and my team, all you have to do is go visit us at therateupdate.com. We are a mortgage advisor licensed throughout the entire country. We can offer you reverse mortgages, construction loans. We can finance if you're building a house long term. We can finance 6 months and sometimes up to 1 year. And we can even lock you in today while you're shopping for a house. We can do a rate lock up to 3 months. So it gives you time to find a house and close. So check us out at therateupdate.com. God bless, guys. Thanks for watching. I'll see you tomorrow. Bye-bye.